Okay.
Okay, I guess I'll just do a little countdown and then I'll mute myself. Okay, like 3, 2, 1.
Well, hello. Thank you for joining us today. We're here talking about taxing virtual currency. My name is Ken Vukovic of the law firm of Vukovic, Mayotte, Singer in Boston, Massachusetts area. And with me today is Rita Ryan, who's going to talk to us a little bit about how we're going to tax virtual currencies. Now, the IRS is familiar with currencies. We know how to deal with currencies, currency exchanges, and everything. But what are the different types of currencies that we're experiencing now with the Bitcoins and all?
Sure. So there are 3 different types of currencies. The first one is quote unquote real currency. It's defined as coin or paper money in the United States or of any other country, designated as legal tender. The second type is virtual currency, which is defined as a medium of exchange that operates like currency, but doesn't have all the attributes of real currency, i.e. it doesn't have legal tender. And then our third currency is convertible virtual currency, and that's what we have in Bitcoin, Ethereum, and virtual currencies like that. It's the same as virtual currency, except that it has an equivalent value in real currency, and it acts as a substitute for real currency. So the IRS has determined that these convertible virtual currencies can be traded between users, can be used to purchase or can be exchanged for US dollars, euros, pound sterling, and any other real or virtual currencies. And then they have determined that these convertible virtual currencies are going to be treated as property for US tax purposes. So as such, the general tax principles surrounding the taxability of property are what's going to apply to the taxability of these virtual currencies.
Okay, well, good. So if we start to take a look at the way the IRS is approaching it, which is that it is property, then I guess we have to apply the general principles of what we have in the tax law. So I would guess property would be similar to shares of stock or something of that sort. So if you hold property and you hold it for an investment and you transfer it as a sale or an exchange of some sort, you're probably going to have a capital gain treatment like you really would have.
That's right.
In a stock situation.
That's right.
You know, but we're understanding the Bitcoin and these virtual currencies are being used in commerce in different ways. So they may be treated almost as cash payments for something.
That's right.
For instance, how do you get a Bitcoin? How do you wind up doing it? What's it called?
It's called mining.
Mining. So if you're mining for a Bitcoin, is that like mining for gold?
It could be akin to that, yes.
Yeah. So if you're pulling it out of the ground and putting it in your Bitcoin wallet, you may wind up actually having income based upon whatever the value of that has to be. So a virtual currency, who knows how that's going to be valued.
That's right.
Certainly the convertible virtual currencies that you talked about, those will be converted into dollars, pounds, euros, or whatever, and some sort of an exchange. So I guess if you're in the business of mining Bitcoins, you're going to have ordinary income. I've heard that law firms, accounting firms, other businesses are taking Bitcoin in payment for their goods and services.
That's correct.
So you'd wind up actually having that Bitcoin come in as income to you, as gross income. So I guess Bitcoin can have 2 forms. It can have income coming in if you're doing it within a trade or business and you're picking up Bitcoin either as payment for goods, payment of services, or you're a Bitcoin miner. And then otherwise, if you're holding Bitcoin as an investment, as you would any portfolio investment, then it looks to me like you're going to have a capital gain treatment, which will be short-term capital gain if you're holding it for less than a year, long-term capital gain if you're holding it for more than a year. And what else do we have to do with the Bitcoin? We have to have records.
That's exactly right.
And how do we do that?
So if we talk about Bitcoin like we talk about a share of stock, we need to have records like stockholders would have. So those are fairly intensive records. That's, keeping track of the date you either mine the Bitcoin or receive the Bitcoin, the date, the value on that date. Now, normally we use the valuations and the exchange rates provided by the Federal Reserve, and also, the IRS publishes average exchange rates. They haven't published a rate yet for the Bitcoin. So we're really dependent upon a third-party information here. We're looking at Oanda.com and xe.com for their exchange rates. So you have to keep track of those exchange rates. You need to use that spot rate on the day that you get it, convert it to US dollars and keep track of it. Or if you're trading in Bitcoin, there's no 1099 reporting that like you would get for your stock transactions. It's all self-reporting. So if you sell the Bitcoin, you need to keep track of the date, the convertible exchange rate that you're using, and what your gain or loss is at that point. So I guess lax records are considered really no records. So you have to be on top of it from the start.
And you have to prove this to the IRS.
That's right.
So with that, you can see that if you have Bitcoins, you have a reporting responsibility. The IRS is going to look at it. How they're going to find you, we don't know as yet, but they will.
Actually, I have a comment on that.
Okay.
There was a recent court decision that came down in 2017 about a series of John Doe summonses that the court said were allowed to be released to Coinbase. There's no better term to describe it, but they're phishing summonses. They're looking for names, dates of birth, address, account numbers, values, things of that nature. And the court agreed that this was all right. So the IRS clearly would like to get into the game now. So we'll see how long it takes them to track all these virtual currency movements.
And the last place you want to be is a fish on the other end of this IRS's bait.
That's right.
Thank you. Now we're going to take another focus on the taxation of virtual currency and how we report that currency to the IRS and what are the reporting requirements. Rita, just go through some of the typical reporting requirements that we see for income that's maybe reported to someone or that you transfer between businesses.
Sure. So if you're working for somebody and you're receiving a wage, that wage income is reported to you on the Form W-2. You get it every year when you do your tax returns. There's withholding on it. There's FICA and FEDER withholding. There's state tax withholding. All that's reported on that W-2 form.
So if you're receiving wages or you're paying wages in Bitcoin to an employee, then you have these responsibilities. You may be able to pay the wage in Bitcoin, but I don't think that the IRS or the states are at this point going to take Bitcoin as payment for either federal taxes, FICA taxes, FEDER taxes, or state or city income tax.
That's absolutely correct. Now, in a similar instance, if you're an independent contractor and you're getting paid via non-employee compensation, there's the 1099 reporting. That would be the same thing with Bitcoin reporting. If you're getting paid in that way, it would have to be reported on the 1099. You would in turn need to report that income on your tax return. On Schedule C.
Yeah.
That's right.
Or if it's earned through a partnership, it would be reported on a partnership return. And likewise, if you're making payments to a corporation, you may have a 1099 reporting to that corporation.
That's absolutely
or a law
right.
firm if you're paying for services to the law firm. So, and this is a reporting requirement that's on behalf of the payor, the person making the payment. So if you're paying out Bitcoin to someone, you may have that responsibility to make these reporting requirements.
That's absolutely correct. So when you're paying people in Bitcoin, I would think of it as just paying people US dollars. You're going to have the same reporting requirements, whether it's Bitcoin or any other kind of currency. So treat it that way.
And the next question comes is, where is the wallet? Where is the wallet located? Is it located in the United States? Is it located somewhere else? And if it's located somewhere else, what type of filing responsibilities do we have there?
Right. So Ken and I have been talking and really about what exactly is a Bitcoin wallet or any other type of virtual currency wallet. And our general understanding is that it's a software program that holds the credentials for that virtual currency. It's where those credentials are stored. So it's not like your wallet you carry in your back pocket. However, with the foreign bank account reporting that's been going on for, oh gosh, what, the last 30 years or so?
Since 1970.
That's right. We need to really consider whether these virtual currencies and these virtual wallets are foreign bank accounts for foreign reporting purposes.
Yeah, now the downside is that if you don't report it, there's a $12,000 plus failure to file penalty if you're not willful, and that can go up to $125,000 or half of the amount of the Bitcoin
Right.
if you don't report it. So the question comes down to, do you take a conservative approach and report the Bitcoin on your form, your FBAR? It's called a Form 114. It's a treasury form. Or do you take a chance and try to expose yourself to those types of penalties?
Right.
So, you know, from our point of view and the way we counsel our clients in the office, it's a reporting requirement. Just report it.
Exactly. There's no tax that's generated on these forms. It's just information reporting. So why not report it? And then you don't get hit with any of the penalties. And is it really worth possibly giving up half the worth of your Bitcoin at this point to pay a penalty? Probably not.
Plus a lot of expenses dealing
Exactly.
with the IRS. The other part of it too is there's an IRS reporting requirement on a Form 8938 for specified foreign financial assets. This came into the law in 2011 as part of Foreign Account Tax Compliance Act. And since 2011, we've been reporting people that have more than $75,000 or $50,000 offshore, or if they're married, $150,000, $100,000 offshore. And if your Bitcoin or your other account happens to be over that amount, we strongly suggest that that gets reported.
That's right.
And we have another $10,000 worth of penalties for failure to file that, plus your statute of limitations never closes on your tax return until you get it reported. So
Right.
these two reporting requirements, even though we cannot definitely say that Bitcoin or any of these virtual currencies that are held in wallets are outside the United States, the IRS can probably make a pretty good argument they're not within the United States. As we said, they're interested in this. They're making statements about it, and they've done John Doe summonses on it. And we strongly suggest that you consider reporting on your tax returns.
Exactly. And hopefully the IRS will come out with a bit more guidance in the next several months, especially with the new tax bill out. But until that point, it's safer to report everything, and then you don't run the risk of incurring penalties.
Okay. Well, thank you for listening to us today, and good luck with your Bitcoin investments.
Thanks very
Thank
much.
you.
Great. That was really good. Okay.
Okay.
Great.
So that was 18. So I can definitely splice that with
Okay.
Dom, and there were a few noises in the background, but I mean that once again that's editing software, so we can
Okay.
fix that.
Good.
Other than
Well,
that,
thank you.
yeah, you're welcome. Okay, I will stop the broadcast and everything, and bring back to you or the finished version as soon as possible.
Very good.
Great. Thank you very much.
Have a nice day, Christy. Bye now.
Awesome. Thank you. Bye.
Bye.